I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome back to the Conscious Day Trader. I'm Yanis, and today we had a good day. We traded the pound dollar. We were short. We had a better bias today, and I think this trade was probably my best ICT tape reading up to date. I've put comments as things were happening, and I was expecting things to react to certain areas, and we're going to look through that. I'm going to give you how I found my bias, how I found my entries, how I found my execution and managed the trade. Make sure you like and subscribe to this channel, and then I'll do more of this. So a better day from yesterday. So let's jump on to, first of all, the profits. We had 665 in profit. This is now getting close to 160k into my Fiverr's prop account. Trading ICT concept into the London kill zone. I'm not going to do it from scratch, just so we can save some time. If you haven't seen how I create my previous daily highs and lows and this equilibrium level, make sure you watch one of the previous videos. So we had our previous daily high and our previous daily low and our equilibrium. So if we jump onto the 15-minute, this was a trade that I really wanted to get. The way you could trade this session this morning, you could have been long, ICT always, you could have been long from the sweep of liquidity below the Asian market. And that would have been an amazing trade that would have given you all the way the top 70 pip move. So you could have get easily 50 pips out of that. If you were going to trade this, I'm just going to show you quickly where that entry would have been. I didn't take this trade, but I think it's useful for people to see. What we had is we had a sweep of liquidity below here. These are the lows of the Asian market. The liquidity was taken out here. We had break up, and then this is the actual break of structure, the change of the conditions. And then the price came back and did into this fair value gap here. That would have been your entry, trading all the way up, and stop, depending on what your size was. I would have probably gone below this. If you can't deal with the 22 pip, you can decrease your lot, and then the profits are less, but your risk is managed easier. So what happens with my trade? So what I saw is I wanted the price to come as high as possible. So we're going to go to our friend Fibonacci, and we're going to turn on, I'm just going to turn it off just so you can see what I was looking at. The price, as you can see, we're trading at premium price. So I was looking for short opportunities. Someone could say that this is long opportunities because we're coming from this move. And I did have that into account. And as you can see here, these black lines, you might be wondering, what are those black lines? This is from this order block here. This is 50% of the order block, the top of the order block, and the bottom of the order block. This is also the fair value gap. So the bottom line here would have been your sort of fair value gap that's still to be filled from that big move. We also have, if we take the fib on that move, where the red candle started, the previous daily low. Now, so as you can see, we had the price has come close to the 50%, and this is, we're on the 8th of Wednesday of February, so this is the start of the day. We can see, if we zoom in, where the London session is. It's in this blue line here, blue line. So we had a screamer of a move up past the previous daily high. So what do we have on the previous daily high? We have resting buy side liquidity. Why? Because we've had this big move, and I expected the price to come and touch this order block here, the bottom side of this order block here. Now, if we look how close it went, this is probably 2-3 pips, so it did actually go to the order block, but algorithmically, that's a big word, algorithmically, we want the price, well, technically the price goes to the pip, and that's when you know that that is the actual outcome of the move. That is also the 50%. So we'd have had a 50% retracement, and we would have also the 50% of the, if you look at this order block here, it's literally the golden eye. So that retracement potentially could have come and touched the 50 or all the way to the 61 for a retracement, or 50% of the order block. So I was looking for opportunities for shorting. This was my plan out. So if something had gone wrong, I would have been sort of managing the trade out with this levels, with the mind that it could be coming to the top of this. Now, why am I saying that this is probably my best tape reading? As I was trading, I put comments, and a lot of people are asking, why don't you record the trade? I don't want that extra pressure when I'm trading. I want to be fully focused on the charts. I don't want to be thinking what people are seeing and how I'm reacting. That's extra pressure that I don't need in trading. So hopefully you can find this useful. Maybe I get more confident in the future and I do some live sessions in Bali. But at the moment, because of what's happening, I am doing reviews of my daily trades, with hoping that you finding the useful and you're learning some stuff. Wow, look at this, that keeps on going. I'm so, this is trading, right? Yesterday, I got the bias wrong, and you have to work all day, and the other day, some things just work and you can see it in plain sight. So why did I short this? And why did I short it on the top of this? That's what I'm proud of in terms of today. What this was is, if you are familiar with the ICT, obviously this is the 22 mentorship where we're looking at fair value gaps, but he also talks about the breaker move. So you will have a price that went high, another price that went higher than this and took out the liquidity, but then broke lower, okay? And that lower then will come and retest, and that's where you're going to be getting in with the breaker. Now, this wasn't a very clean breaker, because this low would have to come lower, then we would come and retest this swing low here, and then we would go down. But I have that in mind, and on the lower time frames, it becomes more evident of what the price wanted to do. I did try and go short from around here, and I had to close it for a loss. I thought this was the break, and I filled in the fair value gap, and that was what I was fighting against in my trades. So what we had here, we had the London session delivered the high of the session. And that was my criteria here. I saw this soon. Let's take the replay, take this candle out. And I wanted the price to come and touch this area. If it touched this area, I was, and like we said, this is from the order block on the daily. So it didn't touch. However, when we saw this movement here, I was quite confident that this is potentially the top. And at 148, I said, failed to break the highs. Is this the London high of the session? And then what happened next? The price broke below the daily high. Now, if this was going long, we had a fair value gap here that broke the high, fair value gap. This is would be your entry, continue down. But we see that the price is heavy red candles, comes back to the previous highs and fails to break around that number that has been hovering around the 121000. So I was anticipating a short opportunity. So if we go down to the 1 minute, you will see where I had this position here as a fair value gap. After I said, is this going to be the top of the structure? It broke below these swing high lows here. The price came down below the 1-2, got rejected on the 1-200, come back into fair value gap, and then broke below this swing high. However, it did create an equal, even though it's below this one, it was pretty much equal to the previous low. So that was quite interesting, because you got sell side liquidity building up below this area here. So that was ideally I wanted that to break lower, even come and break this to get confident in the short. However, it did come back and broke this. We got sell side liquidity taken out. So I was holding this position and it was coming quite high. And as you can see, this price came and retested fair value gaps from this area. These are probably fair value gaps on the 3 minute. That fair value gap there, or on the 2 minute. Let's see. Fair values, tiny fair value gap there. Let's get the magnet. So that would have been the 2 minute fair value gap. So that potentially could have been my second entry, but I loaded on the top, believing that that is the high. Now, what I didn't want to see is this come and fail to break, as it actually break. At this stage where I've entered, I didn't want to see this price come up higher to the 50%. So we've had that sort of swing. If you get a trend line, that high there, you can see that lower highs, and then the price crashed down. So now what was the case? The case was I wanted to trade this all the way down. And what we had, if we take the ruler, I killed a trade on, I think 30 pips, so like $300, and repositions it a second time. So I had two positions, one got paid early, so I was £300 in profit. However, I had to deal with the other loss, which was there for 150. And this was where my predictions came into New York. So let's go a bit back. I was on the 2 minute as I was watching this. So we had the break below this swing here. So what I did, I said, sell side is now taken out. What's the price going to do when it takes out liquidity? Comes back, either reverses or it come back to fill a fair value gap. And then that came back, filled that fair value gap, came back down again. I've got this on the 1 minute fair value. So that was the fair value gap, came back up, got filled there. And then here we have intermediate sell side taken out at 103. So this is this here. The low of this took out this, which means we're going to have a reaction around the price. And we did have that. This was quite interesting because it took the highs. So you had buy side liquidity of this that got taken out. And then what you want to see is the price react downwards to continuation, right? So we don't want to see a strong move breaking the highs on the top here. And this is where the price came back down. And this was sort of the delivery, the distribution. Where are we at in terms of Fibonacci? We are at the 38.2. So the price is still at the 38.2. What we're looking for is a continuation of the price down to the 50% of the candle move, which will be sort of the Fibonacci retracement to the 50%, and even better down to equilibrium. That would have been the big trade. And we'll see when we finish this video, that probably would give us an indication if that happened today. So price continued to come down, and soon as it hit here, exact equal low created at 125 here. And then the price reacted. But look at this. The equal high is exactly on the 38 line, 38.2 of the Fibonacci level. It's crazy. Okay, so the price reacted, came up, and here I've said failed to break the swing high. So this liquidity didn't get taken out. So, which is continuation of that move. Trail stops can go above this. So we continued lower, and this was interesting. This is probably the most accurate thing. I draw this line when the candle was here. You can tell I'm a bit excited about this. the previous candle, I think. I said that the price is going to break down and it's going to come and fill this fair value, this order block at the bottom of this candle. And it touched it to the pip and then came down. And that was a good indication that, and then it came back and touched it again, exactly to that order block. It's a good indication that things were working. So I was like, oh, shall I increase some size? But obviously I didn't. I sticked with that. Now it came down, took out this low, sell side liquidity. What's the price going to do? Created the lower of 304. Now we're getting closer to New York Open. This is London time. And then trade up to the body. Yes, we did that. That was at 140. And then we had created the low below this. And this was where I had set my buy side liquidity. And that was at the beginning of the New York session. I anticipated the price coming to take buy side liquidity here. Why? Because this is evidently going to be coming down. So you had the high of the London session, failed to break in between lunchtime, created lower, then came down, and then came back into the daily high, broke down, and look at all this buy side liquidity that we've built now here. Since the price has had this huge move up, people would be quite wary about going short on this. So you would have buy side liquidity here, buy side liquidity here, buy side liquidity here, buy side liquidity here. All that got taken out with that within, what's this? This were on a minute, for 5 minutes, that got taken out. Took out the highs again of the previous day, and then slowly came down and delivered a beautiful price. Oh yes, and this was another order block which I drew in. And I'm pretty new to order blocks, so this is something that I think I'm going to start introducing, because today was just crazy how accurate this was. I had this line here that is going to come in, the price is going to come up into this order block here. And obviously it tapped it and came down. Rejected at the order block, at the base of the order block, and then came down. And where did it go? So what is this move here? I got 30 pips on each position. So it gave me a good 600. I had to deal with some of the closing positions of a bad position. But in terms of the whole move from the top there to here, we got 53 pips. And that's what I said. If you woken up early, this would have been an excellent trade. And it was quite a clean trade, because you had the low here, sell side liquidity below, came back, created the low after the Tokyo kill zone. And then we had this break on the top, filled the fair value gap. That would have been a beautiful delivery of 50. If you were long on this would probably be quite an easy trade. You wouldn't have to deal with all this tape reading that was happening for so long during lunchtime and then came down. But I was super happy with the analysis, the live analysis minute by minute. And this is why I really like ICT. It's because you're trying to explain at a minute level what each candle is doing. So it can do two things. The one thing that ICT stresses so much is you're either going to do a liquidity run, you're either going to get stops above or below, or you're going to have rebalancing of sort of where the price is. And this consolidation, if you're trying to understand price, we were consolidating from this move in here, 758. So from the London Open, and we created the high 950. All this price was pretty much taking positioning to short the below the 1 to 1000. And it's just brilliant how this works. And I'm definitely after today's session, I am definitely going to go and do the order block series. I don't know which, if you are an ICT student and you can help me out, which one is the best mentorship, or which one is the best course that he's done on order blocks. I would love to see that. We asked for a better day. We got a better day. I think I'm gonna, because we're getting ready, we're going to Bali literally next week. And we've just secured an amazing house. I'll show you all that on, I'm going to do a bit of a series on how I quit my 9-to-5 to become a full-time trader. And that's going to be happening in the very near future. And make sure that you subscribe and like the video, because that really helps the channel. Also check out the Scruffy Trader, because a lot of the stuff that I've been, my historical trading and passing boot camps, he has always helped me and is a great mentor. If you're looking for someone who's honest, he's your guy. He's amazing. Obviously ICT, go to YouTube and find the 2022 mentorship. That's what I would recommend. And for the people that have asked for mentorships, actually, here's your bonus towards the end. I remembered. Someone asked and said, how do you trade the news? What sort of, how can I know what the dollar is going to do? There are fundamental traders and the technical traders. I'm a very technical trader, and I would say ICT is extremely technical, is price, action, and time. Now, what the news does, the news just gives you volatility. Okay, so let's say that you've got news coming out at, for instance, let's take the London session. Let's go back on the screen. And you've got the London session, and you know that between the London kill zone, around 8:30, you're going to have news. Should you be trading that? My perspective is that you shouldn't, because you're halfway through the London kill zone. If you haven't had a setup from the beginning and you're getting into the news event, just let it play out, and then it will show you it's either going to have an extreme move. Let's grab one of the tools. Let's say the news was here and it had an extreme move into the 60%, mid of the 60, the golden eye. Then you're going to be shorting it. If it had a sell-off and it came down and it went to equilibrium, you're seeing if it's taken liquidity below the sell side, and then you'll be long in it. However, if you try to predict that and suddenly the market crashes down, you're stuck in a trade that you didn't want to be in the first place. And now who knows if this is going to go down to, all the way down to sell side liquidity. So just from the news, that could have potentially set you back from that move to that about 120 pips. So there's no reason to do that. Just let the volatility play out, and the algorithm will show you where that liquidity lies and where you should be focusing in terms of entering and exiting your trades, as well as management. In terms of stops, I'm sure I'm going to get some messages about stops. Go and watch the video that I've put up in terms of management. I do it by profits, so that video is on the 431. I break down how I trade and manage my trades. I don't have tight stops, I have wide stops, but I base it on my profits of the day. I'm running on 80 to 90% win rate. So if I got close to getting hit yesterday, if that hit, it would have been a 2K loss. I am trading a $160,000 prop firm account for the fivers. But the drawdown of that is, I can't remember now exactly, about 15 to 16K. So I can take that. Someone who's trading on a drawdown of 2 to 3,000, obviously you wouldn't risk that much. So I base my stops on working days, because I have more winning days than losing days. So a losing day shouldn't take me out more than a week, and that's how I base it on. I hope that's been useful. I hope you like the video. Make sure you like and subscribe and comment, and I'll catch you next time.
Run it. I can't take no loss.